Altcoin bags don't look terrible right now, but they don't look amazing either. We're less than 1 month from Q4 and about a year and a half past the 2024 Bitcoin halving. Historically, this is when altcoins begin to move. The question is simple. Can altcoins really do a 10x from here? Or is that just hopium? In this video, we'll break down the charts, the Fibonacci targets, and the technical indicators to see what's realistic heading into 2026. First, let's set the stage. Instead of looking at Bitcoin or Ethereum, I want to focus on the total crypto market cap, excluding the top 10 coins. Traders call this the others chart. This captures the medium and small cap altcoins. Names like Chainlink, Avalanche, and newer projects, all the way down to speculative meme coins. It's the best way to measure altcoin performance as a group without Bitcoin and Ethereum dominating the picture. If we're going to see the fabled altcoin season, it has to show up here. Now, looking at the chart for the total altcoin market cap, excluding the top 2, the first pattern that jumps out is a massive symmetrical triangle. In technical analysis, this is a classic consolidation pattern, representing a period of intense indecision. You have 2 converging trend lines, a series of lower highs showing sellers are present, and a series of higher lows showing buyers are stepping in. This coiling action signifies a market in equilibrium, gathering energy. The longer this battle wages on, the more powerful the eventual breakout tends to be. Let's break down the boundaries. The resistance side peaked during the 2021 bull market around $490 billion, with a lower high near $450 billion in late 2024. On the flip side, the support around $75 billion first carved out in mid-2023 has held firm during big sell-offs in August 2024 and April 2025. This repeated defense builds a powerful foundation, showing that long-term investors are actively accumulating. So what happens when this tension finally resolves? A breakout from a pattern this large is a major technical event, but it needs confirmation. We can't just rely on price alone. We would need to see a massive surge in trading volume, indicating strong conviction behind the move. Furthermore, we'd look for other indicators to align, like the relative strength index or RSI breaking into overbought territory in the MACD indicator, flashing a strong bullish crossover. Without this confirmation, any move could be a fake out, trapping eager buyers. Assuming we get that confirmation, we can find our target. Following a standard method, if you measure the height of that triangle at its widest point and project it upward from the breakout point, the target lands near an astonishing $850 billion. From the current $283 billion level, that's about a 3x on the entire altcoin index. But this is where it gets really interesting, because that 3x is just the average. For context, a 3x on the index would mean large, established mid-caps might triple in value. However, the real fireworks would be in the lower cap space. As confidence and capital flood back into the market, investors move down the risk curve. This means certain smaller, higher beta alts could easily move 10x, 20x, or even more. We're not talking about a broad 10x across the entire index, but a scenario where a rising tide lifts the biggest ships while sending the smaller, faster speedboats into orbit. A confirmed breakout from this triangle wouldn't just be a bullish signal, it would likely usher in the next true broad-based altcoin season. Alright, let's move beyond simple trend lines and bring in a more advanced tool, Fibonacci extensions. This isn't about predicting the future with mystical numbers. It's about mapping out market psychology. These ratios, derived from the golden ratio of 1.618, appear consistently in financial markets, helping us project where a price trend might extend after a major correction. We're applying this to the others chart, which is crucial because it represents the total market cap of all cryptocurrencies for Bitcoin and Ethereum. It's our best single indicator for the health and momentum of the entire altcoin space. By anchoring our Fibonacci tool from the absolute peak of the 2021 bull run down to the very bottom of the 2022 bear market, we can generate clear, data-driven price targets for this cycle's potential top. The first key level the extensions give us is the 1.618, landing around $750 billion. This represents a 2.6x move and is often the first major target where early profit taking can cause a pause. But in a strong bull market, that's just the first stop. The next major psychological target is the 2.618 extension at approximately $118 trillion, marking a 4.1x gain and signaling a market in a state of confident euphoria. From there, we enter the territory of peak mania. The 3.618 extension points to a $1.6 trillion market cap, a 5.6x return. Finally, the 4.236, a common cycle top target in crypto, sits at $1.8 trillion, representing a massive 6.5x move from today. Now here's the crucial reality check. Notice that none of these standard Fibonacci levels point to that magical 10x return. For the altcoin market to 10x, the others chart would need to surge from $283 billion to $2.8 trillion. Is that possible? Yes. But is it probable? This is where we must consider the theory of diminishing returns. As a market matures, the percentage gains each cycle tend to decrease because it takes vastly more capital to move a larger market. While last cycle's mania did push us slightly beyond the 4.236 line, banking on a repeat is speculative. A more sober analysis suggests this cycle's peak will likely fall between the 3.618 and 4.236 levels. This is still a phenomenal return, a 5.6x to 6.5x on the entire altcoin market. But it's critical to distinguish this data-driven forecast from the dream of a guaranteed 10x across the board. So, why is a market-wide 10x gain so much tougher this cycle? The first major headwind is a simple, unavoidable force: diminishing returns. As the total market capitalization of crypto has ballooned, the sheer amount of new capital required to move the needle has grown exponentially. Looking back, Bitcoin's return on investment from cycle bottom to top was astronomical in its early days, smaller, but still massive in 2017, and smaller again in 2021. This pattern is a natural sign of a maturing market. The days of the entire market easily multiplying tenfold are likely behind us, replaced by a more complex landscape where gains are harder won. The second, and perhaps more potent reason, is market psychology. The collective psyche of the crypto market is scarred. We're dealing with widespread post-traumatic stress from the last bear market. The catastrophic collapses of giants like Terra Luna, Celsius, and FTX weren't just headlines. They were deeply personal, financial disasters for millions. This has fundamentally rewired trader behavior. The old mantra of HODL has been replaced by a pragmatic instinct to secure profits. Consequently, every significant rally now runs into a thick wall of selling pressure. Traders are quick to sell into strength, which caps the kind of euphoric blow-off tops that defined previous bull runs. And yet, despite these headwinds, the bull case remains compelling, and it starts with volume. When we look at the others chart, representing the total crypto market cap, excluding Bitcoin and Ethereum, we see trading volumes hit all-time highs in 2025. This isn't just noise. It's a clear signal that a tremendous amount of capital is actively flowing into the altcoin market. This money is chasing emerging narratives, from decentralized physical infrastructure, or DePIN, to the convergence of AI and blockchain. This shows a broadening of the ecosystem beyond just the majors, indicating deep, sustained interest. This bullishness is echoed in the technicals. The weekly MACD, a key momentum indicator, has decisively crossed bullish above the zero line. Historically, such a crossover signals a major shift in market momentum and has often preceded a significant local peak anywhere from 50 to 120 days later. If history rhymes, this timing aligns perfectly with a powerful rally in late Q4. Adding to this, the relative strength index, or RSI, is currently neutral around 54. It's not overbought. Instead, it's coiled tightly inside a consolidation triangle, building up energy. This structure suggests the market has significant room to run, and a breakout could be explosive. So we're at a fascinating crossroads, caught in a tug-of-war between the heavy psychological baggage of the past and the powerful technical signals of the present. While a market-wide 10x seems unlikely due to the market's scale and learned caution, the conditions are ripe for a powerful, albeit more measured, bull market. The key will be watching whether the immense liquidity flowing into altcoins and the bullish technical setups can overcome the sell pressure from cautious investors. The stage is set for a dynamic end to the year. Put it together, we have a symmetrical triangle coiling tighter. Volumes are rising. MACD points to Q4 as a likely breakout window. RSI says there's fuel left. My view, others likely makes a move toward the 1.618 or even 3.618 Fibonacci levels, putting the cycle target around 3x to 6.5x. That means real money to be made. Individual outliers will still deliver 10x or more, but the broad index probably won't. This is a realistic roadmap. Expect strong alt performance into 2026, but don't count on a full market-wide 10x. So, can altcoins 10x from here? For the whole market, probably not. But between a 3x and 6x index move, plus outliers that can 10x or even 20x, there are huge opportunities. All signs point to a breakout window between late October and the end of the year. That could be the moment the next big altcoin wave begins. The charts are building pressure. The question is simple. Are you positioned before altcoin season arrives? Let's see what happens.